Hello, good evening. It's Adil Fazal here, market analyst at CFDs.com, bringing you a review of European markets for Thursday, the 10th of December 2015. This video is being brought to you by CFDs.com. Please visit the website and certainly sign up for a trading account because there is an offer at present of up to 25%. Alternatively, you can visit the educational website, which I update daily and very frequently, which is www.cfds.education, to certainly learn more. And alternatively, there is an app now that you can download, which is called Trade Signaler off Google Play and obviously Apple Store. Okay, now the markets. How do we decipher these markets? Okay, so let's try and attempt to. Okay, in terms of today's price action. Okay. Where do we start? Where do we end? Okay, so European markets basically closed. Let's just read you the closing figures here before I attempt to decipher here. Certainly closed weak, given the fact that Asian markets certainly were relatively weak. US markets obviously overnight were weak. And we did manage to go into the green at one point before we ended up back in the red. Okay, so the FTSE down 0.6%. The DAX managed to finish green, which is a good sign. The CAC 40 certainly finished flat. Okay, so no real obviously movement there. Now, in terms of the actual economic data and basically the news flow, okay, overall. So let's just start with the FTSE 100. Mainly, it was the BOE. Obviously, given the fact that they held rates, held QE. Okay, nothing new there. Okay, everything was as expected. The trade balance data certainly was weak in terms of the exports data, certainly weak as well. So that certainly wasn't a good sign at all, okay? Because the trade balance data certainly missed by 2 billion, in excess of, well, I think it was in excess of 2 billion. So obviously that's negative in terms of economic fundamentals, solely based on fundamentals, okay? Now, the US data, we had continuous jobless claims, initial jobless claims, import prices, export prices, basically all came out weak, and certainly argued for a weaker dollar, and that's the reason why we've had a rally in the Aussie and the Kiwi to a large extent. Although the Euro failed to rally, and the Euro failed to rally mainly due to the fact that we had dovish commentary from several ECB members, so the names of the likes of Jazbek and Likkonen, and I think there was one more, I can't remember now, but basically that was the reason why the Euro has certainly remained weak, even with weaker US data. Obviously, given the fact that we held the 200 MA as well, this is something that I discussed during the day on the Euro USD on the daily chart. It certainly seems to have been exhausted. This post-Draghi short squeeze is certainly over, especially given the fact that Draghi has done some damage control in New York last Friday, and he said that all available tools were basically on the table in terms of obviously countering and inflation, and certainly attempting to push inflation higher and countering deflation, should I say. Okay, in terms of the positive news out of Europe, the FTSE in particular, Glencore, debt restructuring, okay, and obviously spending cuts as well, that certainly helped the market. Volkswagen and BMW's sales obviously haven't been as affected as everybody expected, and therefore that was a bullish argument, so they're certainly pushing the markets higher. Now, oil demand increased by OPEC, so again, that certainly helped the FTSE to a large extent, and TUI earnings certainly beat, even though we've had terrorism concerns. That certainly alleviated some concerns and certainly allowed investors to embrace risk. So there are basically dovish commentary from the ECB, also from the BOE as well. There was a tweet, if I can recollect correctly, that was referring to the BOE potentially postponing their rate hikes into May 2017. So again, that's very dovish. Now, CPI industrial production data certainly out of the Eurozone certainly was weak. The CPI data as well was relatively weak as well. So again, a cause for concern to a large extent in terms of the actual economic data and the reaction there. Okay, now let me just bring up the US data as well. In particular, it was mainly to do with jobless claims, and that was a main concern. Okay, we also have Mr. Courier as well, by the way. Yes, he spoke too, and he was certainly dovish as well. The Bundesbank, that's at 6 p.m. that conference. That should be out shortly. Other than that, there's nothing really major in terms of economic fundamentals and news flow. Okay, so again, it's all about oil, and the market certainly seems to be fixated on there. Let me just bring up the chart of oil here as well. If I just bring up the, here we go. So we certainly seem to be holding on, potentially trying to put in some sort of base here at present. 60-minute chart certainly is holding, so it's a good sign, positive for equities. If you can bounce off here, that will certainly help equities, and the market should certainly move higher. Okay, now in terms of technicals, now let's see exactly where we are. So Euro stocks on the daily chart, previous resistance equals support. Basically, I'll declare my position. I'm already long the Euro stocks at this juncture at 3264. I'm long the Nasdaq at 4634. So I am looking for a bullish bias at this current juncture. Okay, that's my bias. I've confirmed that. And if you want to utilize that before you listen to this video and look at my analysis, then yes, there is a bias in my analysis, but I will be as objective as I can. Okay, daily chart is into previous resistance equals support. You've put in a doji there now, and therefore you are looking for a potential reversal, especially given the fact that the Euro USD obviously is weak and is back down to 1.0950. That should certainly help European equities higher. We have this downward sloping contracting wedge formation and looking for a potential break higher. 10-minute chart. 10-minute chart has held resistance at the 3290 level. We have obviously pushed lower here, okay, and we are now looking for a potential reversal from my understanding. Now the reason why I'm actually along the level at 3265, as you can see, we have horizontal support here. So given the fact that the market hasn't made a lower low, and given the fact that we made a higher low, and therefore I am now looking for a higher high and potential test of 3310 on the Euro stocks. That's my basically target on the upside, and then obviously eventually a break of this 3310 and obviously move higher. Now the German DAX, basically the German DAX has been led by the gap, and it's all about the gap really. We closed that gap fill at 10,500 and previous resistance equals support as well. So two areas of key support. Okay, the 60-minute chart, as you can see here, gap fill. Ever since then we've started to push higher, and we are in this zone. Okay, now zooming in on the 10-minute chart, you'll see that we do have a very strong case now for an inverted head and shoulders formation, and that's basically what I would be looking at in terms of trading going forward. Now the left shoulder obviously we've put in here, you've put the head in here, and then looking for a right shoulder which we've seen here, and then obviously off we go to the races. So you are looking for a target of 10,700, and then obviously the 200 at 10,720, eventually 10,750. So certainly looking for higher highs and higher low pattern here on the German DAX, and no lower lows, no lower highs at present. So therefore I am looking for a thrust higher on the German DAX up to the 10,700 and to the 10,750, anywhere between the 10,700 and 10,750 on the German DAX. That's my target on there. Okay, now we can cross verify as always the MDAX. If you look at the MDAX, you can see the same pattern occurs there as well. You have this inverted head and shoulder, so your left shoulder there, your head obviously has been put in, you're looking for a right shoulder, and off you go to the races. So this series of low lows and low highs has certainly come to an end, and the key here really is this beautiful bottoming tail here. The bottoming tail that was put in the morning on the first 60-minute candle was basically your key. Okay, that was the key for a potential major rally on the German DAX, and that's exactly what occurred. So you can see here, and given the fact that obviously it was aligned, it's not just the German DAX that we look at, it's aligned with several other factors as well, such as Euro USD, for example. Okay, so 10-minute chart certainly is set up beautifully for a reversal, and you can see here in the daily chart we're back into that 200 MA, back into horizontal support, and therefore you are looking for a very strong argument for the German DAX to rally. If German DAX rallies, we all know what's going to happen next. Okay, the German DAX, it dictates the market. Right, the tech all share, again looking at the daily chart, we are now coming into a horizontal support, and you can clearly see that this level is obviously holding. Double top obviously is held there, obviously we reversed ever since. You do have a gap fill as well, so bear that in mind. So this is a gap fill support, given the fact that we gapped higher. So again, another area of contention, and certainly is considered to be a positive support zone. And zooming in on a 60-minute chart, you can see that we did put in a bottoming tail again, obviously holding that horizontal resistance zone here. Looking at the 10-minute chart, again looking for an inverted head and shoulders formation, given the fact that we've put in a lower low and we failed to put in a lower high. So once you put in a lower low here, sorry, in the outset, we failed to make a lower low thereafter, and we made a higher low, and therefore you are looking for a reversal. Given the fact that we have this unfilled gap up here, okay folks, bear that in mind, you have an unfilled gap here, So the gap here is at 21.15. You are looking to target that gap and close that gap eventually. Okay, so therefore you're looking for a bullish bias here. Okay, so to both MDAX 50 and the Tech All Share both indicating a move higher on the German DAX. Okay, now the French CAC. Let's just try and decipher what's happening here. Daily chart is into gap fill support. Therefore, again, immediately you're looking for a bullish bias. Hence the reason why my bias is long on Euro stocks and the Nasdaq at this very juncture. The actual 60-minute chart is more of a interesting pattern, okay, given the fact that we have obviously closed that gap fill support. We've held double bottom support here as well, and therefore you're looking for a base to project higher. Looking at a 10-minute chart of the actual French CAC itself, okay, so you're looking at this zone, okay, so you have this inverted head and shoulders here. You're the left shoulder here, you've put in the head potentially here, looking for a right shoulder, then off you go to the races. So again, this is a pattern within a pattern. Okay, so you have this horizontal or diagonal trend line, and you are looking to potentially break out this wedge formation and move higher. Your first level of resistance is going to be at 4990, and then eventually you're looking at 4710 in terms of resistance on the upside for the French CAC. So certainly moving higher. Now looking at the actual VSTOXX mini, again this is the actual VIX itself. And the VIX on the VSTOXX, we're back into that double top resistance, and therefore you're looking for a top in the fear index, and therefore you're looking for a high in the Euro stocks. Okay, or move higher in the Euro stocks itself. Looking at the CAC volatility index, you can clearly see on a 60-minute chart, you've basically put in a potential top here, a double top level, and certainly looking for weakness on the CAC itself, and therefore, the Euro stock CAC volatility index, and therefore you're looking for a move higher on the French CAC. Okay, that's my interpretation, and that's my understanding of the French CAC itself. Okay, now the FTSE 100 now, or should we say we've seen the CAC 40, so the FTSE 100 now. Let's just bring this up again. Weekly chart, you're into support. Daily chart, clearly you are into that key pivotal zone of support. You can clearly see here you're at that 6090 support zone and diagonal trend line, and therefore it's calling for quite a substantial rally on the FTSE. Double top, double bottom support, obviously you're into that as well. Therefore we haven't made a lower low yet, okay, as of yet. And now again on the FTSE 100 itself, you are looking for a potential move higher, given the fact that you've got the unfilled gap at 6135. That really does need to close. Okay, that gap there at 6135 definitely needs to close, and it will be interesting to see how this market responds. Okay, again, given the fact that Glencore certainly has put in a potential bottom for the FTSE itself, I am expecting some strength now in the FTSE, and certainly a potential thrust higher. You do have this falling, obviously a bearish channel, looking to potentially break out this channel and obviously start to trade higher. Now looking at the left shoulder here, you've the left shoulder, you've got the head, and now looking for a potential right shoulder, and off we go to the races. So again, inverted head and shoulders formation. The pivot low is 6080, your neckline is around 6120, 40-point gap, you're looking at 6160. And again, abracadabra, 616, 617 is the horizontal resistance. So again, arguments here for a rally on the FTSE 100. Again, it will rely substantially on the actual price action of crude oil. Okay, now the 60-minute chart of copper certainly has not put in a lower low, and certainly is starting to show some signs of strength as you've basically built a base, and therefore expecting a move higher. Okay, along with oil as well. Now I should have brought up a chart of Brent. I did do it last time, but I forgot to save it, so let's just bring that up for you again. Brent oil, it's all about that double bottom. Okay, on the monthly chart, you can clearly see that here we're at that double bottom support zone, and therefore looking for a potential bounce. The weekly chart, you still seem to be making lower lows and lower highs, but again, it's the larger time frames that take precedence. The daily chart, as you can see here as well, and the 60-minute chart, we've just breached below on the 60-minute chart as well, so therefore leaving that vulnerable to potentially a new, obviously a new low. But from my perspective, the weekly charts will certainly hold, and we are looking to get a potential move higher on all global markets. Okay, so that's certainly the scenario. That certainly is the case at present. So in terms of European indices, I am expecting a thrust and a move higher, especially given the fact that Shanghai now is back into support. The Nikkei itself has flushed quite substantially, and we are looking for potential support on the Nikkei as well. So That again is going to be very interesting in terms of how the Nikkei responds. Like I said, it is a zone of contention and is coming to potential support on the Nikkei itself. So for now, the markets are in a risk-on bias. That's my understanding, given the fact that the jobless data that came out today at the US certainly reignited the not concerns, but hope for more QE. European stocks certainly are based and are looking to potentially propel higher. The FTSE to propel higher as well, and that should take US stocks to new highs. Okay, I think that's a wrap. Be sure to visit cfds.com for your trading needs. Goodbye now.